All right, let's talk about the value of using stop losses. I have up here on the screen a chart of the U.S. Canadian exchange, and you remember it's one of the ones I pointed out that I thought would be an interesting divergence with the U.S. dollar. And I also, in the preliminary video, impressed upon you that currencies are a random walk. There's a lot of volatility in the short-term movement of currencies, a lot. So the question then becomes, if I set a forecast for a month or 2 months out, should I use stop losses? Because just the volatility, just the daily volatility will stop you out. You'll end up with a whole bunch of tiny losses and you'll have to keep resetting your position. However, professional currency traders will say, take the stop because you can always buy it at a lower price. If you keep getting stopped out, you're riding your losses on the way down, so you can always get it at a lower price. So have a look at the Canadian here. This is an hourly chart. This goes all the way back to, we see January 19th, January 20th, January 23rd, 24th. And we can see that it was sort of going sideways for a while. And up until yesterday morning, it looked like it was holding its channel. Well, what is this over here? This big thing over here. This is the Trump administration granting expedited approval for a Keystone XL pipeline, saying that as far as the administration is concerned, go ahead, do it. Well, there's still a lot of things they got to do, but go ahead and do it. They're on board with it. They're not banning it. So this is the Canadian dollar getting stronger immediately against the U.S. dollar. So if you had a position, which I did, I had a small position in the Canadian. I said I would open a small position, then I would play it either at the extremes of the boundaries of the high or low, the support or resistance. I'll draw that out in a second. But if I were playing stops, I would have been stopped out. Now, as far as from a currency trader's point of view, it's wise to get stopped out because you could have re-entered the trade back here. But if I re-entered back here, I would have been stopped out here only to have it come back. So the question about whether using stops or not is a big one, because it can be frustrating when you keep getting stopped out of a position and then you have to go into it at a higher price. And you go in and you get stopped out again and again and again. So you widen your stops to not get stopped out all the time. So let's talk about how we would normally set up a typical stop. This, by the way, is this the beginning of a trend? Is this, and as an analyst, you have to be able to assess this news about the Keystone pipeline being allowed to go ahead as far as the administration is concerned. That means shipping oil from Alberta all the way to the Gulf Coast where they can actually get it to market. Because right now West Canada Select sells at a discount to WTI simply because a lot of it is landlocked. Will this actually boost the Canadian economy? Will this actually help? The dollar is signaling right away, yes. But here's the thing. The price of Canadian oil didn't move. The dollar moved, but oil didn't move. So I see that divergence, and I think the oil market's got it right. It's going to be years before the first gallon of oil can flow out of Alberta to the Gulf Coast. You're talking a period of maybe anywhere from 4 to 7 years before that can happen. So this immediate reaction, that's the wrong move. So I bought more after the event because I believe that that's the wrong move. As soon as all the euphoria of it dies down, we'll continue back on the same trend. But right now, let's take a longer term look at what's going on in the Canadian. Let's go for a 1 year. Look right here, and we'll draw some lines, and we can see right along here specifically, it appears that we have, we can move that up a little bit more, I think. It appears that the Canadian dollar is coming to a support line. And if we draw another line, probably up here, we can see an upper part of this channel. So we have a bottom, a top, a bottom, a top, a bottom, maybe a false breakout. And this is where, on Sunday, I showed you where the currency was, right in the middle of the range. And I said I'd be a strong buyer if it broke out above the range, and probably want to buy somewhere near support because we've got a triple bottom, a very strong bottom, and we're getting near there now. So that's why I added more to the position. In fact, I added aggressively to the position. I've got 320,000 long the U.S. dollar versus short the Canadian right now. And I think that once the euphoria of the approval. First of all, it's not an approval of the pipeline. It's just an administration saying they're not going to reject it. However, there's lots of conditions on that pipeline that are not going to help Canada at all. Condition number one, it must be all built with American labor. Condition number two, it must be all built with American materials. American steel goes into it. Nothing else. American steel goes into it. By the time that pipeline is built, demand for oil will be even lower. It will be even lower because you're talking 4 to 7 years before it's done. This electric vehicle thing is not going away. In fact, it's going to accelerate. In 7 years, we will be using far less oil than we use now, which means you'll have build a pipeline and no one will want what you send through it. So it'll be this big, long, empty pipeline. Mark my words on that. It'll be a big, long, empty pipeline. Oh, it'll be exciting as it's being built, but it's going to be a pipeline that'll run nothing. So I think once the euphoria wears off and the currency market starts to realize that, you know what, this isn't going to affect anything for years. I think we're going to find very strong support right here. Now, I'm talking like a technical analyst, but currency markets are. I'm looking at what technical analysts are seeing right now. They're seeing this heavy support, and I think they're going to buy at this support, and I think it's just a matter of a week or two before we break up above this. Where are we here? This is about 135, 136. So I just want to point out to you that all sorts of funny things can happen like this. Out of nowhere, that if you're using stop losses, especially on currencies, if you're using tight stops, you would have been stopped out. If you would have decided, okay, well, it's rebounded here, I'll get back in, you would have been stopped out. It rebounded here, you got back in, you would have been stopped out. It's rebounding here. So you really have to look at your trading ranges, and you want to set your losses accordingly. So if I go back to the 1 year, here's how I would set a stop loss on this one. Let's go back to 1 year, and I'll show you what I would do. I would set a stop loss somewhere around 130.05 or 130. If it breaks down much below 1.305, because that's way below this, what I consider a false breakout here, that is kind of way below it, I would then set my stop down here. So if I'm buying just above support and it breaches down below the technical level, I'll set my stop. So I'm not going to set a stop loss like 20 pips or 30 pips away. I'm going to set stop losses at key technical breaks. That 30.5, if it breaks 30.5, in my opinion, that's a key technical break. I'd set a stop loss there. I wouldn't be the only one, by the way. Many people would be looking at this, and if they were playing stops, they'd set it around that level. So if it did get here, it would trigger a whole bunch of stop orders and send it down even further. So I would set my stops down here because I don't want to get stopped out in the range. And look what it does. Up, down, up, down, up, down, up, down, up, down. It's volatile. So setting your stops within the range, you're going to get stopped out. You set your stops below the range. If you're short, you set your stops above the range. All right. That's just something to think about. I do want you to play around with the stops. Start setting some stops, because here's what you're doing. You're experimenting. You're trying, right? Enter a currency and set a tight stop. Set a 20 pip stop and see how many times you get stopped out. Then increase it to 30. See what happens. Increase it to 40. See what happens. And then you'll start thinking about, well, if I use the technicals to set my stops, where would they be? And watch what happens. Only through experience do we actually learn. So let's learn with some fake money. All right, there's a quick little update about setting stops. So before I go, let's just listen to what an analyst from Citigroup had to say on Bloomberg this morning about the Keystone, and pay particular attention to the timeline he gives for when this thing will start to be built. Not when it will be built, but when it will start to be built. He says end of the decade. You're talking about another 3 years before it even starts to be built. After that, we'll come back and we'll have a look at the Mexican peso. Something interesting is forming there.
We hear what key banks are looking at. Eric Lee, commodity strategist, joins us from his office in New York. He's with Citigroup, of course. Eric, let's talk about the Keystone pipeline. You had a memorandum coming out from President Trump yesterday. What I want to pretend is that the Keystone pipeline does get built. What happens to Canadian production?
Well, I mean, broadly speaking, first of all, there's a question of timeline. So it may be later this decade when it finally gets built and running. So it's not an instant change. Second of all, it does roughly speaking, it may not lift volumes of Canadian oil production by that much, but it should raise the local oil price for Canadian producers, which will be welcome.
Yeah, let's talk about that. So West Canadian Select didn't have a huge pop yesterday on the news. It's now at a discount about $13 from WTI, the oil here in the U.S. What can we expect if this pipeline does go through? What's the differential?
Well, I mean, it can bring it back down to pipeline costs. Again, it depends on timing, because what we have is a couple of things happening at once. Canadian oil sands production continues to grow, even with the recent price crash. Pipelines needed to be built to keep up in order to bring down, or rather lessen this discount that Canadian oil producers are getting for their oil. And when there's not enough pipeline, you move it by rail. And so railing Canadian oil tends to set the marginal price for the Canadian oil barrel, and that's why we're seeing those discounts. Now, until that pipeline gets built, actually, you may not see much of a pickup in Canadian oil prices relative to, say, WTI or Brent.
So before this news broke from D.C. yesterday, literally like an hour before, you guys put out a note about 11 wildcards in the Trump presidency, the Keystone pipeline being one of them. You had a probability of 55% that it happened. What is your probability now that it gets built?
Well, I mean, I think in the wild card, what we wrote was actually a 98% probability that it would get first of all approved and get done. I think at this point, really, well, the approval is yet to come. As you said, there's still stuff in the language. It really is more at the moment a call for expediting some of the processes in place, but it's likely to get at least approved from the administration's perspective. There's still things from the company side that they need to do.
All right, Eric, thanks so much. Great to see you. Eric Lee, commodity strategist at Citi.
Okay, so let's have a look at what the Mexican peso is doing. When the Keystone pipeline was announced, it almost made it seem that there was a preference more for Canada than Mexico, because Mexico sends a lot of its oil to the Gulf Coast right now. The Canadian oil would displace that, and their Secretary of Trade has actually publicly said, "Look, we have balanced trade." The U.S., of course, has balanced trade with Canada. We're not looking to change anything there. That's balanced trade. That's good. But we have a trade deficit with Mexico. We want to fix that. So they're kind of singling out Mexico. But have a look, and this is what happened on the morning of the 24th, yesterday, when the pipeline was announced. Here's the pipeline being announced, or the news that the pipeline was going to be announced in Canada, and the peso actually strengthened on that news, and then eventually weakened. But look at where we are. We're in a new trading range on this currency here. If we're looking over a short period of time, is you have, and of course, a downward motion is the peso strengthening because the U.S. dollar buys fewer and fewer pesos. If we see the currency move this way, this is the peso weakening. This is the U.S. dollar strengthening. So we're in this sort of trading range right here, and it didn't really move a lot on that news. Which tells me that the market feels that all of the bad stuff is into the peso. So even as more and more harsh talk about trade with Mexico comes out, it's more of the same. It's just more of the same. So if we repeat something 10 times, it doesn't make it 10 times as worse. It just means the damage is done on the first time, and all we're doing is we're repeating it 8 or 9 times. When you get to level 3 and you do behavioral finance, you'll find that there is a bias, something called a confirmation bias. And one of the variants of the confirmation bias is to tend to give weight to information that is the same information, even if you find it in different sources. So if we hear from one source that there's going to be a renegotiation of NAFTA to make it more fair with Mexico, then we hear from another source and another and another. If we hear the same story over and over, we seem to think that it's really a big story. Meanwhile, it's the same thing. The currency's not reacting to the news. The currency's not reacting anymore, which means I believe that the market really believes this is overdone. And so we're in the middle of this little trading range here. If we break down below 21.27, I would add to my position. I've got a small position on the peso right now, 120,000. Long the peso, short the U.S. dollar. If it breaks down under 21.75, over here we have a double bottom. If it breaks that double bottom, I would add to my position. Right now we're in the middle of the range. Where could we go? If it breaks out above 21, let's say 62, 62.5, this is 21.60 at the top of the range, I go to 21.62.5 and set a stop loss on my position to knock me out, and I would add to my position under here. That's how a currency trader would play the technicals, is to do that, and then they'd let the market figure out the direction and go from there. So there we go. Let's see what kind of excitement we have. I'll pop on little videos from time to time. I'll actually put a playlist up for the currency trading, and I'll put all the videos in order so that you don't have to look for them. You could just go to that playlist, and I'll put little commentaries up every couple of days, just to show you how to think about these things, and maybe you can see what I'm seeing, or maybe you see something different. I don't know. All right, let's get back to work.